Okay, so it started recording. So anything that's said here, of course, can be cut out, but yeah, all the good stuff, You know the drill.
hmm
Hey guys, welcome to the Syndicate, the show where we get the world's best investors, like David Weekly on the program. David already gave me a great pun to get started with his name, so we're just going to skip the puns. David's a product manager at Google. He's an angel investor. He founded Hacker Dojo. He's a very interesting and busy guy, so thanks for coming today, David.
Hey, thanks for having me.
So I'd like to give all my guests the opportunity to introduce themselves because it's not something I'm at all good at. So take it away. How'd you get into this world?
Cool. So I was pretty much born a geek. My dad was a computer engineer, and his dad, in turn, actually had the job title of computer, which technically makes me one quarter computer. So I grew up programming at about the age of 5. I came out here to California to go to school, and I found myself surrounded by entrepreneurial nerds. So felt very much at home. I've been here for half my life. Got my degree in computer science, struck out into the world, worked for a startup, worked for a big company, decided it was time for me to start my own company. That company, PBWiki, now PBWorks, is actually still running independently more than 10 years later. And I underwent a transformation that's common for many technical founders, which is that you start off coding everything yourself, and then things go well, and so you can hire up a great technical team, and then eventually your technical team takes your commit privileges away, and you later learn out that you've now acquired a new job title of product manager. So I was running that company, and that was going pretty well. More than a lemonade stand, but less than an empire. Ducked out to do my second company. That got acquired by Facebook. At Facebook, I formally became a product manager, and then came over to Google about 3.5 years ago, first working on creating a new R&D lab to get everybody online with new technologies. And I'm currently head of product for Google's data center software team. On the side, I love building communities. I love getting people together. So I created a hackathon called Super Happy Dev House that became pretty popular as a way of getting people together and just to go and encourage people to build things. A lot of that energy ended up getting transmogrified into Hacker Dojo, which is a nonprofit co-working space, a kind of hacker space out here in the Bay Area. And I've also become increasingly involved in investing, which sort of started off as advising people how to make different mistakes than the mistakes that I had made as a first-time founder. And then I found that it was very exciting to be able to couple advice with checks. So I started cutting some of my own checks along with advice that I would give to companies. I scaled that out with a couple syndicates. So first, Mexican.vc, which was the first Silicon Valley seed fund for Mexican tech companies. That's actually done incredibly well. Drone VC, investing in early stage drone companies, Neuron VC, investing in early stage deep learning companies. I'm now starting to explore investing in Bangladeshi startups. Happy to chat more about that and chat about product management. Anything else you want to know?
Yeah, so you've done Facebook and now Google at this point. What was
That's
it
right.
like what was it like 3 years ago?
What was Facebook like?
Yeah.
Well, super high energy. I think Facebook, for better or for worse, was a little bit more like a frat house. There are reasons why people join fraternities. They're very exciting. You form close personal relationships with other folks, and it's very intense. It's one of these things where if you were to leave for dinner with your family, for instance, at like 5:36, people would tap you on the arm and be like, "Hey, is everything okay?" Because just the work culture was that you would work until quite late. And it's easy to observe that. You can just drive through and look at a company's parking lot at 7 p.m. and get a sense for what the culture is going to be like. I mean, to be fair, people would also roll in pretty late. It wasn't unusual to see engineers coming in at like 10:30, 11 o'clock, but you knew that they were going to be there until like 8 or 9 at night. So it was a real high intensity, high energy culture, a lot of alcohol, I would say, but just a lot of really bright folks. I would say the ages definitely tended younger there. Um, and they did a great job at being very explicit about their culture, about what they were trying to form, and to give people the tools to make change. So one of the things I really liked about Facebook culture was one of their slogans was, "Nothing at Facebook is somebody else's problem." And that really underscored that if you saw something that didn't seem right, whether that was in code or culture or anything, you were empowered to jump in and fix it yourself, right? It was a real spirit of an empowerment in that sense. One of the other things I really liked was, in the first 6 weeks, if you're anywhere on the technical ladder, you do what's called a code boot camp. So you'd sit down and you'd fix real live bugs in the production product. And basically, by the end of your first week working for this company, you were checking in code live to production for 1 billion people. And that was pretty cool. And you were shoulder to shoulder with a combo of fresh grads and senior vice presidents who had run like 300, 400 person engineering orgs, right? Didn't matter. You all were there sitting shoulder to shoulder fixing bugs. So Facebook culture had a bunch of really cool things about it that I definitely appreciated in my time there.
The last part's interesting. Is that like an ego kick? So anybody can do it. You get in here, you're pushing code. Is that like is that the hook, the 10 friends in 7 days? Once you've been in and you've pushed code that's going to 1 billion people, then you're hooked on the experience?
Yeah, I think some of it is just trying to live that culture of everything. Nothing at Facebook is somebody else's problem. Of helping you understand that the resources are out there to allow you to drive an impact. And it's one thing to say it, and it's another thing to live it. And I also think the equalization bar of it didn't really matter how senior or how junior you were all there in the trenches fixing bugs together. Really was another cultural bit that I appreciated very much about Facebook.
What was it like selling the company?
Well, so to be honest with you, it was an acqui-hire. Facebook reached out and said, "Hey, I really like your background. I like what you're doing with this second company. Let's have a chat." And so we came in and we talked with them, and we weren't super sure at that time that we were ready to sell, given that we were so early in it. But I think what happened was my co-founder had just very inadvisedly bought a house and had a kid and was, I think, looking for a little more stability than a super early stage startup could provide. So we decided, okay, well, maybe we'll explore a sale here. And we did the right thing, which was to shop it around. So we talked to a lot of different companies. And my goodness, nothing will open the door for corp dev faster than I have a concrete offer in hand from Facebook. Um, so nobody wants to lose out, right? Because they didn't move fast enough. So we got a huge number of meetings and interviews and so forth with a bunch of other companies. That turned into a couple other offers, and Facebook was able to improve their offer that they gave to us to bring us on board.
Do you usually see for startups like that a no floated around or something similar?
Sorry, can you repeat?
Do you usually see can you turn the volume down a little? I hear myself. That's weird. No worries. Technical glitches. It always happens. Are there normally no floated around clauses? For instance, we got an offer.
Yeah.
No shop clauses.
Yeah. So once you sign a term sheet, one of the terms on that term sheet is a no shop. And they usually give you something on the order of like 72 hours to sign the term sheet before it expires. So it's an exploding term sheet, which means, by the way, you have 72 hours to go and shop it around, right? Because somebody presents you with the term sheet, it's not binding on you until you've contractually agreed to it. So the thought is that you need to be able to move fast, and the other counterparties also know that you've got this exploding deal. So yeah, you need to coordinate it. It's the same. It's a very similar thing when you're raising funds. By the way, an investor might give you a term sheet for a Series A or a Series B, and it'll often have a no shop clause as well, and it'll be exploding. If it becomes moot if you don't sign it pretty quick.
It creates that limited time offer effect where everyone has to get in. The sharks are here, and then you jump over to Google. How's the environment different there?
So Google's a really professional environment with all the pros and cons that implies, and so you don't see a lot of kindergarten politics. People are kind to each other. They're generally thoughtful. So it's notable if somebody is very snarky, very rude. Especially on a more executive level. Like you expect people to generally assume good intent and to be trying to help each other. One of the things that Google culture does really well is that in their performance evaluation, you need to get in peer feedback, and oftentimes that'll be peers from outside of your org, not just inside your org, and you're evaluated on basically how much of an impactful and helpful team player you are. And one of the interesting artifacts of that, that's very much by design, is that if you reach out to kind of random people at Google, you will find an open door. People are unusually receptive to inquiries from outside of their particular organization. So for even this morning, actually, I can relate something. So I used to help out with Google Fiber, which is one part of Google, and now I'm in the data center world. And I found out that the team that's responsible for constructing fiber cables going between buildings in our data center campuses was having some cost issues. And I realized that it's called OSP, outside plant, right? And so I found out that our campus OSP team hadn't been talking with our Google Fiber OSP team, which knows a lot about how to dig holes in the ground and put in conduit for a good price. And it's like, hey, wait, you both are basically working on the same thing. You two should talk to each other. So I reached out to both and I connected them, right? But that kind of thing is very common, very easy to do at Google, to go and tie threads together. I really like that.
So where did the investing come from? You said you started advising. How did that happen?
Well, so really it was just, I made a huge number of terrible mistakes as a first-time founder. And I had some great mentors, but there were some holes. There were some areas where if I had been mentored in certain areas, I probably could have saved a lot of time and suffering, right? And so I wanted to make sure to pass on those learnings so that other people doing startups would make different mistakes than me, right? You're not going to avoid making mistakes, but just the ideal behind education and learning is that people make surprising new mistakes, right? You don't have predictable mistakes. So I wanted to share some of my learnings with other entrepreneurs, and I really enjoyed doing that. And then I got to a place financially where it was possible for me to start chipping in and giving people checks alongside that advice.
And then you decided to go the syndicate route to make the economics make more sense?
Yeah, I mean, it helps in particular to go from being able to cut, for instance, a $10,000 check to having 100 accredited investors behind you. And now you're effectively cutting the company like a $200,000, a $300,000 check. And so that actually makes it worthwhile for an entrepreneur to come meet with you, to walk you through their product and so forth, because they're not collecting, a few $1,000s. This is a meaningfully sized round. So I think that one of the dynamics of investing that changed with AngelList syndicates was that it empowered even part-time angels to act as if they were small VC firms in terms of the size of checks that they could run through the system.
Yeah, it's very interesting. So Mexico and Bangladesh, what's the story there? There has to be some reason.
Yeah, so I think in both cases, it's effectively arbitraging institutional racism. So when I came to fellow US investors about 7 years ago and said, I'm really excited about Mexico. There's strong engineering culture, there's great design culture, there's great interaction between those engineering and design cultures. There's some great startups that are starting to come out of the woodwork here, and they're not being taken seriously by investors. And I got a bunch of people who reacted saying, like, aren't you concerned about the drugs and the violence and the rule of law and stuff like that? And it's like, yes, and the fact that you say that is my opportunity here, right? Because nobody was taking those startups seriously, including Mexican investors, by the way, who at the time were just kind of atrocious. So I figured if we are the first people to actually take this group of startups seriously, we'll get the best startups in the country, because there'll be no reason to not take our money, right? We'll give them founder-friendly terms. We'll give them a path to greater funding, and we'll make it very easy to take our money. And nobody else is doing this, and so we're going to get all the best startups in the whole country. So we planted our flag. We put ourselves out there. We got about, if I recall correctly, about 75 companies applied. We gave checks to 7. And I got to tell you, that portfolio has performed very well. So 3 weeks ago, our top performing company from that batch of 7 The $20,000 check we cut them is now worth more than 7 million. So it's a 300x return.
Nice. So you've
And
got a nice carry.
I mean, the point of investing is to see a future that other people don't see and to be eventually right about that, right? And if you, for that to be true, you need to see where are assets undervalued, right? This is Warren Buffett's approach. He takes a look at like what is the true value of an asset, what is the market's current value of that asset, and if the true value is below the market's current value, it's a good buy. Now you may have to be very patient for the market to catch up, right? Because there's an old saying that the markets can stay irrational longer than you can stay solvent. So you have to have the endurance to go and wait for the market to catch up to your perception. And in the case of Mexico, I actually didn't need to wait very long. But I think you look at even 7 years ago, what were the macroeconomics? And the answer was that the Mexican economy was actually doing very well. Mexican household wealth had basically tripled in the prior 20, 30 years, over which time period American household wealth in the middle class had been flat. Right. And so people had perceptions that were more accurate in the 80s that, oh, Mexico is this very poor place. America is a place of wealth. Right. People are just trying to stream across the border to claw to get a piece of American wealth. You see a lot of these narratives continue today. They haven't been updated for the reality of actually Mexico's doing quite well now. And a lot of the cross-border migration is actually going, a sizable amount of it is now going the other way for greater economic opportunity. But people haven't updated their mental narratives, right? But eventually the markets do catch up. So the key as an investor is you spot where is this mismatch? Where is there an undervalued resource? And in my case, it was very obvious that Mexico had a vibrant economy, a growing economy, a great set of startups, and literally nobody was taking them seriously. That's not true today, by the way. So I think it'll be a lot harder to today parachute in, get access to the very best deals. So that's the other thing you need to do. You not only need to see where is there a structural mismatch in terms of true value versus perceived value, but you also need to make sure that you're not subject to adverse selection. So if you just run, if you were to go out there today and run a similar program, you might find that the very best Mexican startups already have entree to higher sources of capital. It's no longer as hard as it was to raise a seed round in a Series A. It's still very hard to raise a Series B in Mexico, which is an interesting market opportunity. But it means that if you were to replay that today in Mexico, you might find that you wouldn't get as extraordinary returns as we were able to because the ecosystem has matured. So you'd be more subject to adverse selection in terms of like who would take your money, right? So you need to come in a way where the very best of the participants are likely to engage you.
What year did you get started? And timing's everything. You can be right, but if you're wrong on timing, it's not going to work. So how did you figure out the timing? Like you said, the insolvency.
Yeah, so I mean, I'm willing to play a long game. So when you raise a fund, typically it's 10 years, and oftentimes people extend to 15 years. Liquidity commonly comes about 9 to 10 years after a very successful investment. And so it's just, I came in already with those kinds of timeframes in mind. And it seemed very likely to me that for the startups we were investing in, that they would come to fruition in under a decade. So I think there's two kinds of bets, right? You can try to be very clever about exactly when will which bets come to fruition. And that can be really hard, right? You need to be super smart and super lucky to get something like that right. And this is particularly true if you're the entrepreneur, by the way, because you may only have a pretty limited runway, right? You might have like an 18-month runway. So if you can't make the market take off in that 18 months, you're done, right? That was your one shot. As an investor, you can take a much longer view, right? Because you can invest in a portfolio of these companies, and you can sit and wait for these companies to really come to fruition over a much longer time period than an individual startup.
So you syndicated a deal. You guys went 350x. Based off of my numbers, that means you have about 1.4 million coming in just in terms of carry. Why are you still working as a product manager at Google?
Well, so we didn't actually take all of our shares off the table because we actually still believe in the further upside of this company, Yogame, that we invested in, right? Um, Also, I'm one of four partners. So we've got Lisa Creed, who's done an amazing job running our back office. She actually set up our fund and did all the mechanics there.
Oh, so it's a
Um,
fund, it's not a syndicate?
yeah, so Mexican VC was actually like a super tiny fund, but it was a fun fund. Um, and Drone VC is a syndicate, and Neuron VC is a syndicate. Although Neuron VC did raise, just to make things complicated, a syndicate fund.
How do you decide which way to go when there are so many options?
So some of it is thinking about where is your risk? What do you have lined up in terms of the capital that's going in? What are the investor statuses of the people who are going to be participating in? What are the vehicles that you're going to use for outbound? How much confidence do you have around your ability to close an individual deal? How quickly do you need to be able to cut a check? What are those check sizes? Right, just the different vehicles are going to give you different answers across that spectrum.
Which areas are you most excited about today? You have four different investment theses, so to speak, at this point.
So I mentioned earlier Bangladesh, and I think the reason why is it maps pretty well onto where Mexico was like 7 years ago, where you've got a vibrant startup ecosystem that's starting to turn out some really cool companies, but investors are not really meaningfully present, either in terms of local investors or in terms of outsiders investing in Bangladesh. I mean, the thing I structurally look for is like where is again their fundamental value. Bangladesh, large country, 160 million people, sorry, 150 million people, about 200 million people speak Bangla language if you include the Indian state of West Bengal. And it's starting to do pretty well overall, but nobody talks about Bangladesh. Like you don't go to the hip investor parties in Silicon Valley and hear people all the buzz about Bangladesh. I mean, it's so bad actually that I've had a number of colleagues. I'd say I'm interested in Bangladesh, and they're like, "Yeah, investing in India is pretty cool." I'm like, "No, wrong country, right? Bangladesh, right?" So people just forget about it because it's sort of mentally in the West, at least, it's in India's shadow, and India's had a great deal of attention. That's not to say I don't believe there aren't fantastic investment opportunities to be had in India, but there's an incredible amount of interest and capital focused on Indian startups and growing India as a market. So I feel like it's a great market, but it's also well served. And I'm looking for where do I have unfair advantage? Where am I looking that nobody else is looking? And then the answer there is Bangladesh. So you asked for some other theses. I would say other industries where there's a similar gap, where nobody in Silicon Valley is really hip to that industry. It seems very boring. It seems like an old industry, right? And a great example of that is like metals, right? So the London Metals Exchange does like around $11 trillion of metal a year, right? In terms of what they exchange. And you look at that versus, say, the global advertising market, which is the whole reason why Google is an interesting company, right? Is that it participates meaningfully in the global advertising market. Metals is a much bigger market, and yet nobody really talks about metals and metals exchange and what are we going to do there. You take a look at metallurgy, for instance, and how could we apply artificial intelligence to metallurgy to go and design better metals, new metals, right? How well characterized is metallurgy and the metallurgical sciences? And the answer is not very. There's a lot of even fairly basic stuff that we don't know. There's a lot of very basic stuff. We don't know how it works. And so there's a huge amount of potential for us to get better at this, and the potential impact of improving these fields in terms of the development of metals, in terms of the exchange of metals, particularly when it comes to the rare earths, I think is extraordinary. So it turns out that the second biggest rare earth mine in the whole world is right here in California, in Mountain Pass. But it's sat idle for the last few decades, in part because China has been producing high quality, low cost rare earths from the number one rare earth mine in the world, the Bayan Obo mine in Inner Mongolia. But the other reason is that historically it's taken industrial processes that are very unfriendly to the environment to go and separate out rare earths. But there have been a number of interesting advances in academia around using genetically engineered bacteria to have a much greener extraction process to extract the rare earths. So investing in these things, identifying rare earth extraction technologies, and making rare earths available for trade and exchange are incredible opportunities. And again, these are not things that are commonly talked about in Silicon Valley. They're not areas of research.
Yeah, it's something where it glosses over a lot of people's head, but at the same time, there's huge money there. So Mexico and Bangladesh, how do you must build some type of infrastructure, some type of team to be able to really execute on those type of visions. How'd you do it with Mexico? How do you plan to do it with Bangladesh?
Well, in the case of Mexico, a lot of it is I just got very lucky in finding a pair of partners who were very hardworking, very intelligent, and capable of building a trust network among all of the tech entrepreneurs in Mexico. And so this was Cesar Salazar and Santiago Zavala, and they basically started a bunch of these super happy dev house events across Mexico, literally a dozen cities, and they threw dozens of these events in dozens of cities. And so just it was an enormous amount of work that they were willing to put in to encourage entrepreneurs across the whole national ecosystem to take their nearshoring or offshoring jobs and take a break from them on the weekend, hack on some cool ideas, and to get inspired that it was possible for them to go and create cool companies. And the output of that was a whole bunch of eager teams that said, cool, I guess I can start a company. Is anyone willing to go and cut me a seed check? And then very conveniently, we were able to show up and be that seed check for them. But it's something that I found overall is that entrepreneurs tend to network pretty well with each other. And so once you know one, it's pretty easy to go and find others because like meets like, right? They want to seek each other out and support each other. And so in Bangladesh, for instance, I've started reaching out to some of the entrepreneurs. And sure enough, a bunch of the entrepreneurs know each other and are kind of reasonably well networked, particularly in Dhaka, the capital city. But there's no equivalent investor cloud, right? And that's because it just doesn't exist. It's not that they're there and just sort of need organizing. It's that there hasn't been systemic investment in Bangladeshi startups, which has been a point of difficulty for the startups that are there. So part of what I would love to do is to participate in surfacing the opportunity to investors both in Bangladesh and here in the West, and then to create vehicles that make it easy and founder friendly to go and funnel capital into early stage capital into Bangladeshi startups.
So what I hear with you without saying it is you're trying to get to the point where you can jump full time out of Google and into investing, and you're trying to figure out where exactly is that jumping point. That's kind of what I hear without saying. You're very passionate about everything that you're talking about. So I have to imagine that's the case.
It's possible that I could go full-time investing at some point. You know, while I'm at Google, I am A, trying to make a difference there, and B, also trying to learn as much as I can. You know, I'm given a very interesting front row seat into how Google thinks about planning and building its data centers and managing the work that goes in there. And these are some of the biggest data centers in the whole world, right? And so this is just a fantastic chance to get an education on not only specifically data centers, but also large-scale complex systems and how to navigate them well. So I'm really enjoying it, and I've got great peers there. I think the point at which I stop learning or stop feeling like I can drive a lot of impact there, yeah, I'll probably, at that point, peace out. I'm not a lifer kind of anywhere, but Google takes really good care of their people. It has given me some very interesting things to work on with some fantastic coworkers, right? And so I enjoy that. And I've been doing investing on the side for years now, and so it's something I'm okay with doing it on the side. And I will tell you one thing that I did. For 3 months, I did an entrepreneur in residence gig at Trinity Ventures. So I was full time for 3 months on doing just investing, and I don't know, it didn't sit super well with me. And the reason was I'm an operator, and so just the idea of only coaching of only investing and not myself jumping in and trying to build things and build value, I didn't feel like it was the right stage in my life to just go 100% in investing. And I feel that way today. I think at the point that I leave Google, it'll be to not go full-time in investing, but it'll be to do my next startup. And this time really shooting for the moon, like seeing if I can go and build a lasting billion-dollar enterprise.
Which will be, any thoughts?
I think there's something in the metal space. So I've been sniffing around there, doing a bunch of reading, talking with a bunch of people, and just thinking about what a strategy there could look like.
Magic metals that you can pass through the border test without these new tariffs Trump is hiking? There's your opportunity. I want to jump to the lightning round. How's that sound, David?
All right, sounds good.
What's the first deal you ever did?
First deal I ever did was with a company called Browserling. Literally a pair of starving entrepreneurs walked into my office. And this is one of these things where this never happens, right? You never actually get starving tech entrepreneurs who walk into your office and say, like, we're trying to figure out what to do with our startup. But it was a Latvian and a guy from Alaska. And the two guys walk into my office and they're like, so we've got this startup. And I'm like, wait, what did you guys eat for breakfast? They're like, we haven't been eating very much. And I'm like, hold the rest of your pitch. Here's a check for $1,000. Use it for groceries and feed yourself. We'll figure out the terms later, but it's important to me that you not die. I was like seriously concerned for their material welfare. So I ended up leading like about just a small $50,000 round in Browserling, and they are still going. That Latvian founder had so many things he stubbed his toe against, including visa issues in the United States. But he's proven incredibly persistent in just growing his company, month by month by month by month. That was the first deal I did.
Interesting. So it's really they're really going for the ramen profitable at some point.
Yeah.
So you talked about the first investment, but outside of that, two most successful investments to date.
So most successful is definitely Yogame. The 300x plus cash on cash return. It was enough to return the fund several times over just by selling a quarter of our equity in Yogame. So that made Mexican.vc the most successful Mexican tech fund in terms of LP cash on cash returns in history. So that worked really, really well. There's another company that I got in very early just because I happen to be friends with one of the founders, Atomwise. They just last month announced that they closed a round that valued them at well north of $100 million. And I participated in one of their very first seed rounds, and so that's been just paper return there, but it's been a pretty extraordinary paper return.
It's okay. The paper is always exciting as well.
Yeah.
What about big misses? No, not yet. But hopefully you can buy better groceries in the future. That's the dream. Any big misses anti-portfolio?
I think probably the big one there was, my first company is still around. It's still going and serving millions of people. But there was a point at which, I was the primary founder and had grown it up to a team of 30 and $10 million of financing. And I had thought that was going to be the big kahuna, that was going to go to $1 billion. And I think it was tough finding out that we were hitting the second half of the sigmoid much sooner than anticipated. So, you set out to be the king of the private wiki space, and then you succeed in that and find that it wasn't as large of a mountain as you had hoped. I think that was tough, but a lot of learnings along the way there.
It happens. What about any big mistakes?
Lots. This was the whole point of my getting involved in advising, was to share with people how not to do a startup, to make different mistakes than me.
What's the worst story?
Probably it's that it's really important to not spend money until it's in the bank. And I mean, that sounds sort of obvious when you say it, but as a first-time founder, when you meet with a venture capitalist and they look you in the eye and they shake your hand and they say, we're going to do this deal, the deal isn't done. The deal's not done until the cash is in your account. So I made some very rookie mistakes. I went out and I got us a nicer office. I upped our burn quite a bit. And then just things happened and the deal evaporated. And so we actually found ourselves in a cash pinch with our back against the wall, entirely self-inflicted, because I had been literally banking on the round closing. And so this angel investment group basically came in with a lowball offer, and I negotiated them up a bit, but I had to take a much worse than market, I would say, offer because I had spent myself into a corner, and that was a really dumb move. So I definitely yell at my advisees to not spend the money until it's in the account. Just because somebody shakes your hand and says it's a done deal, it's not a done deal.
Amen. Same deal with customers. Until those people are paying you, an LOI is not all that important.
That's
What industries are you most excited about today?
what industry am I most excited about?
Yeah,
Oh,
for a
it's
couple.
yeah. So I would say if we're willing to take a longer term view on it, I'm tremendously excited about where quantum computing is going to go in the next 10 years. I think it's one of these things where we can see the iceberg miles away. Because quantum computing is useless today. It's not actually helpful for solving any problems. It's not going to be helpful next year. It's not going to be helpful the year after that, right? And so I think what will happen is we're going to go through a hype cycle. People are going to talk about, they're going to get excited about it, but it will continue to not actually deliver anything useful. So people will forget about it. But in the meantime, steady progress is going to get made. And then what's going to happen is we're going to hit this event horizon probably about 10 years out, when we're going to hit a critical number of qubits to start solving interesting problems, and it's going to change our industry. And we are lacking right now a lot of the I would say fundamental building blocks for even thinking about quantum computing. You take a look at digital computing back in like the early 50s, where we didn't really have programming languages, right? We didn't have computer science as a systems theory. We didn't have data structures or anything like that. We just knew that it was possible to go and switch, right? so, so what can we do with a whole bunch of these switches built up on top of each other? And we needed to have many levels of intellectual abstraction built up to be able to do useful things, right? And to be able to make rapid forward progress with computer science and applied computer science. Right now, where we're at with quantum computing, we don't even really know what language should we use to express the programs that we want to run on these processors. How should we think about data structures that we want to feed in, right? So like we have yet to experience this generation's Donald Knuth, right? Or similar luminaries who will give us the right mental tools to think about how to code these systems, which are radically different systems than our current von Neumann style digital computing machines.
It's like if you met an alien and you had to communicate and everything, it's just completely different.
Yeah, so like there's a lot of exciting work to be done. And then I think, as we get, 10 years, certainly 15 years out, we're going to start seeing some radically new systems that are just built in a totally different way and that solve problems in a very different way than we do today.
Interesting. And then let's take that to the flip side. So outside of ICOs, what's overhyped?
Well, good on you to call that. I would say VR. I think a lot of people are really pumped on VR even still, but they're not really thinking through the social aspects of use cases. And I think there's a very simple aspect of social UX here, which is when is it appropriate to have a full headset on your head? Would you do that on the subway? Would you do that in an open office environment where you've got coworkers around you, right? Would you do that at home on the couch with other people who also have headsets on? Or are all of those things weird? And actually, there's only a limited number of environments where the social acceptance for having a blocking headset on is present and appropriate, right? So I
Sort
think
of.
VR actually is much more limited in terms of where we will see that embraced than people are currently assuming. AR is a different story, but I think we've got many generations of hardware to go before we have something that people feel comfortable wearing, where people's counterparties feel comfortable wearing. And you can see the social impacts of getting that wrong with bets like Glass, for instance.
But I think a lot of that's also people's thought process around something as well. Imagine in 1980 if someone was completely ignoring you texting on a cell phone. That would probably be pretty weird as well. And it's kind of the norms get changed. I totally agree with you. Or even if you look at like the Alexa and devices like that, people pretty much use those in their home because it's incredibly awkward to use anywhere else. But even now, people are starting to use that in their home with other people. I agree, though. VR is probably going to be a I do it on my own type deal.
Right, and so there's some cases like gaming where that makes sense, but even AR raises kind of awkward social interaction questions. Like if I'm talking with somebody, I, am I overlaying like a squid head on them? Right? If it's obvious that I am wearing like AR gear as I talk to you, like first off, do I look really weird? Is it obvious that I've got an AR headset on? If it's not obvious, is that creepy because you're not sure what I've got on and what I'm doing? And if it is obvious that I'm wearing an AR headset, are you confident that you know what I'm seeing? So the advantage when both of us just have regular vision is that both of us have the same perception of the scene, right? So if you perceive a giant octopus to my left, I also perceive that same giant octopus. So there there comes an interaction modality here where it's like I either need to know that we're having the same shared experience, and when I see an octopus, you see an octopus, right? In some way of being sure that we're synced there, or it's going to be really weird because I'm going to be burning cycles trying to guess, trying to mentally model like, are you actually engaged in this conversation with me? Or are you checking your email? Right? And this was one of the critical issues with Glass. Besides the, are you recording me and live streaming me without my consent? So I think the issues here with VR and AR are as much or more about the cultural product experience than they are about specific technical barriers or technical challenge. And I think a lot of times people miss out on that because it's easy to track technical progress, and it's easy to say, oh, this system has improved technical fidelity from this system, but there's no similar easy bar that says this system is more likely to have high cultural acceptance, and I'm going to measure that and track for that and work hard to improve that.
I see what you're saying. It's a very interesting thought process. AR is definitely less intrusive than VR, but still intrusive. We'll probably get to the point of contact lenses pretty soon. It'll be one of those things where it's awkward until it gets started and has a mass movement, and suddenly it's weird to think about it as awkward because suddenly it's something everyone does.
Well, so some of it is timing, and some of it is form factor. So just another one that I want to play back for you is thinking about 10 years ago Bluetooth headsets, right? So you get Chet from sales who had this big dongle with a bright blue LED, right, and made a big show of having a Bluetooth earpiece, right? And made it really obnoxious for everyone. So nobody wanted to be that guy. Nobody wanted to be Chet from sales. Like, oh yeah, 10,000 orders, do it. So, hey, I wanted that large cappuccino. Okay, all right, yeah, no. Asia's doing great, man. We're crushing it there, right? And just nobody wanted to be that guy because it was kind of obnoxious. This is, by the way, also why the cell phone I think was so late in adoption in the U.S. is we had the car phone from '80s culture, right? So cultural adoption matters in terms of timing and also in terms of form factor. And I think the transition here in the US for Bluetooth headsets was much more around people listening to music than it was people having conversations. And so it became very acceptable. If I have full over ear noise canceling headphones on, that's actually not awkward for other people because I know exactly what's going on. You're jamming out. You're not listening to me. You're not trying to listen to me, right? And that's much more comfortable than an ambiguous situation of you might be on a phone call, you might be trying to talk to me, you might be crazy and you're just talking to yourself. I have no idea, right? But if it's visually super clear, for instance, with over ear headphones, then I think that removes the ambiguity, and it's the ambiguity that leads to social discomfort.
Completely agree, and I would say that the AirPods are terrible for these. You see these Mac hipsters, and they're walking with the AirPods with other people, and I just have to laugh like, Jesus, what a loser!
So
Just complete. Yeah, you don't
I
know
think
if
it's
they're
exactly
listening.
that. I think it's exactly that. I think it's the same social awkwardness that we saw with Bluetooth earpieces 10 years ago. This time with a slightly slicker looking piece of apparatus that's slightly less obnoxious in terms of having the blue blinking light, but it leaves an ambiguity there that's socially uncomfortable. And I think that resolving social interactions and ambiguities is going to be critical for mass market acceptance of any of these technologies. And I don't see that discussion being had meaningfully.
So what I find interesting is if you look at the other Bluetooth headphones, all the other ones are connected. So because they're connected, when you get to whoever you're getting to, you take them out and put them in your pocket. It's not awkward and weird. You're
Yes.
not going to lose them. But these with these tiny little uh, AirPods, it's like, well, this is slightly awkward. Where do I put these? So it's
Right. So they
yeah,
leave them in, and then that creates social tension with your counterparty who doesn't know whether you're listening to them or whether you're listening to music, you're on a phone call.
and they don't have that. They don't have that cool kid feel. Last question. So where do you go to daily, weekly, etc. basis to stay informed? Podcasts, blogs, newsletters, etc.
So I'm a paid subscriber to two sources. One is The Economist, and then the other is The Information. Big fan of both. I read up on news.ycombinator.com, which aka Hacker News. I find the links and the threads there pretty great. I'll occasionally go to Engadget. Um, I'll occasionally go to Hot Hardware and places like that. Um, yeah, those are generally my primary news sources, and then like just Facebook feed. I'll often have friends tag me into something or send something to me on Messenger if they think I'd be particularly interested in it.
Oh, you still have the Facebook feed. Oh
I still
no.
have Facebook. I didn't delete Facebook just like all the cool kids did last
Oh
week.
no. I didn't delete it. I just have an extension that blocks the feed. So you get rid of all the bad stuff and you just use the messenger. I'm sure they love that for advertising. What's the best place for people to connect with you online, David?
So I'm D Weekly pretty much everywhere on Earth, but I'm on LinkedIn, I'm on Facebook, I'm on Twitter. People can email me, dweekly at gmail or david at weekly.org. Yep, all those are just fine.
And no, he's not a reporter, guys.
No,
David, thanks for coming
not
on. I really appreciate it. This has been a fun, interesting conversation.
awesome. Thank you.
Awesome. And thanks for tuning in, guys. We'll talk to you again soon. Cheers.